Raoul Pal is a big deal in finance. He's not just another analyst, he's a visionary who has made a name for himself by seeing what others often miss. He's like the Nostradamus of Wall Street, but with better hair. His predictions have earned him a reputation for being eerily accurate. He used to run a hedge fund at Goldman Sachs, one of the most prestigious financial institutions in the world. That's like managing a baseball team full of Babe Ruths. Imagine the pressure and the skill required to handle such immense talent and responsibility. Now he spends his time analyzing markets and telling people what he sees. He dives deep into data, trends, and economic indicators to provide insights that are both profound and actionable. He's got this incredible track record of predicting market moves. His ability to foresee economic shifts has made him a trusted voice in the financial community. Remember the 2008 crash? Raoul called it. While many were caught off guard, he saw the signs and warned those who would listen. He's not always right, but when he talks, people listen. His insights are valued not just for their accuracy, but for the depth of understanding they reveal. He's like that friend who always knows which stocks are going to pop. Whether you're a seasoned investor or just starting out, his advice can be a game changer. In a world where financial markets can be unpredictable and volatile, having someone like Raoul Pal to guide you can make all the difference. His expertise and foresight are invaluable assets in navigating the complexities of the financial world. So, what's Raoul's big secret? What's the indicator that has Wall Street buzzing? It's the 10-year US Treasury yield. Sounds boring, right? Wrong. This little number is like a crystal ball for the economy. The 10-year yield tells you how much return investors expect from lending money to the government for 10 years. When the yield goes up, it means investors are demanding a higher return. When the yield goes down, it means they're happy with a lower return. Simple, right? But here's the thing. The 10-year yield doesn't just reflect the present, it predicts the future. When the yield rises rapidly, it suggests investors are worried about inflation and expect the Federal Reserve to raise interest rates. That's bad news for stocks. Why? Because higher interest rates make it more expensive for companies to borrow money. That can slow down economic growth and hurt corporate profits. And what happens when profits go down? Stock prices follow. Section 4. Gauging the market temperature. Now, the 10-year yield isn't the only game in town. There are tons of other indicators out there. The VIX, the PE ratio, moving averages, you name it. Each of these indicators provides a unique perspective on the market's health and direction. But Raoul argues that the 10-year yield is special. He says it's the purest measure of investor sentiment. Unlike other indicators, it cuts through the noise. It's not influenced by short-term noise or market manipulation. This makes it a reliable gauge for long-term trends. It's a clean signal that tells you what the smart money is really thinking. Investors and analysts alike look to it for guidance. And right now, the signal is loud and clear. The 10-year yield is sending a message that can't be ignored, reflecting the collective sentiment of informed investors. Section 5. Raoul's crystal ball. So, what's Raoul's prediction? What does he see in the financial future that has everyone talking? Well, he's been warning that the rapid rise in the 10-year yield is a sign of trouble ahead. This isn't just a minor blip, it's a significant indicator that could spell major changes. He thinks it could trigger a correction in the stock market, maybe even a crash. The kind of correction that could wipe out gains and send shockwaves through the financial world. Now, nobody knows the future for sure. Predictions are just that, predictions. But they are based on data, trends, and a deep understanding of market dynamics. But when Raoul Pal talks, it's time to pay attention. His insights are not just random guesses. They are well-researched and often eerily accurate. He's been right before, and he could be right again. His track record speaks volumes, and many investors have come to rely on his foresight. So keep an eye on that 10-year yield, folks. It's a crucial metric that could provide early warnings of market shifts. It might just save your portfolio. Staying informed and vigilant could be the key to navigating turbulent financial waters.